Hello, I'm Tom Moul, Director of Strategic Tax Services at Stanball & SPC. In my role at Stanball & S, it's my job to bring innovative tax planning strategies to folks like yourself and their companies. Today's topic is the Federal Research Tax Credit. The Research Tax Credit has been around since 1981 as part of our federal tax code, but we have found it to be very misunderstood and quite underutilized by many of our clients and the folks that we come into contact with. Well, it's my job today to maybe help you understand the credit better and see if it might be a strategy that could provide some very significant tax benefits to you personally and to your company. The tax credit has gone through many different formats and shapes in its many years on the tax code, and it was never part of the permanent tax code. We were always worried about it expiring. Well, thanks to some tax legislation that was passed in December of 2015, some of those fears have been alleviated. We now have the tax credit as a permanent part of the tax code and with some very favorable new provisions that we'll talk about in just a few minutes. So what is the research tax credit? What do I have to do to qualify? Well, really, you just have to try to improve your business. The credit is available for new and improved products, new and improved processes, really anything that you would do to make your business better. And I think that's been one of the misconceptions. People have thought they had to have a very, very high-tech operation, maybe a pharmaceutical company or something where you had a specific lab dedicated to nothing but research and development. Well, that's just not the case. Well, who are the companies or types of industries who can best take advantage of the credit? Well, historically, we have seen manufacturers be the industry that took credit for most of the benefits. And quite honestly, manufacturers are a big beneficiary and will remain a big beneficiary. Historically, about 67% of the credits that have been granted have gone to manufacturers. So if you are a manufacturer, certainly you should pay attention, because if you're not taking the credit, you may be missing out on some tax savings. But it's not just manufacturers. At Stanball & S, we work with a lot of architects and engineers. We work with a lot of construction contractors. And we know you're always looking for a better way to serve your clients, whether it's a new design, a new building method, anything that you haven't done before that you approach with the attitude of, I'm going to try to do something better, just might and probably will qualify for the credit. In addition to those industries, there are many others. Agricultural producers is another prime candidate for the credit. Anyone who is doing software development to use either internally or even externally probably is going to qualify for the credit. So this opens up the credit to many industries you maybe wouldn't have thought of. It could be banks. It could be insurance companies. So what kind of activities do I have to partake in to get the credit? Well, there's a 4-part test that is somewhat complex, and it's an area we can help you through, but it boils down to the improvements have to be technological in nature. They have to be done with a degree of uncertainty where you don't know the outcome when you go into the activity. There has to be a degree of experimentation, which I think goes really hand in hand with the uncertainty. And the ultimate goal is to make some sort of improvement. And the activities qualify whether that improvement is successful or not. So as you can see, the key is capturing the qualifying cost. So what are those costs and what is the credit worth to me? Well, the credit generally turns out to be about 5 to 6.5% of something called QREs. And QREs are qualified research expenditures. Very technical term for something that's fairly easy to understand and capture. So the QREs are 3 items. Number 1, they are the wages that you pay to your employees to do the experimentation, to do the research and development. So whoever's in that process, whoever's trying to make it better, we want to capture their wages. We also want to capture the wages of their immediate supervisors and anyone else in your firm who may be supporting their efforts. Number 2, the materials and supplies that they consume in that process. So that one's pretty straightforward and shouldn't be that difficult for us to capture. And number 3, if you're contracting with outsiders to do the research, bringing in an outside consulting firm, 65% of their cost would be applicable as well. So once we've captured those costs, and I think you can see we've just hit on one of the very key points, and one of the areas we at Stanball & S can help you with, and that is capturing the cost and capturing to their maximum we can maximize the credit. Now remember, a credit is one of the most valuable tax planning tools you can come up with. Not only is it permanent, and we don't have to pay it back in the future, a credit offsets tax on a dollar for dollar basis. So for every dollar of federal tax that you would otherwise pay, we can reduce that tax bill by the dollar for each credit we generate. Now in the past, another reason why maybe people didn't delve into the research credit and didn't think it would apply to them is there were some limitations on applying the credit onto your tax return caused by the alternative minimum tax. The alternative minimum tax gets a lot of publicity, a lot of play in the media about being a real burden on many, many taxpayers. I don't think many people fully understand the alternative tax, and we're not going to get into that today. But the good news I have to tell you is beginning January 1st of 2016, the limitations caused by the alternative minimum tax no longer exist for credits that were generated by a company with $50 million or less of annual revenue. So I think that would apply probably to most of you that are listening to this presentation. Number two, another favorable provision of the new Tax Act was to make the credit available for startup companies. So these companies may not yet be generating profits or taxable income, but they're certainly doing lots and lots of research and development and experimentation to develop their products, to develop their processes. Well, if you don't have taxable income, startup companies, and that's defined as companies with $5 million or less in revenue and in business 5 or less years, well, those companies can use the credit to offset the payroll taxes that they pay as a burden on their employees' wages. So almost certainly you're going to be able to take advantage of that. And if you should have a year where you just do not have any taxes that you can offset, I think that would be rare, but if that is the case, all is not lost. We can carry the credit over for an additional 20 years and utilize it into the future. In addition, many states have their own research and development tax credit. The states take many, many formats, far too many for us to discuss here today, but the odds are that the state you're operating in would also have some benefit to you to take advantage of for these activities. We'd be more than happy to do a free assessment with you to talk about your activities and determine if the credit would be worthwhile for you to pursue, and if it is, we can help you capture the cost. We can help you document the cost. Documentation is obviously very important should any of the taxing authorities challenge the credit that you take. We can calculate that credit for you. And last but not least, and quite importantly, we can help you develop the methods and the processes to continue capturing the qualifying cost far into the future so that you can capitalize on this credit for many years to come. So if you'd like to hear more, there's a link on your screen that we would love for you to click, provide us a little information in the form of a self-assessment, and give us your contact information, and one of our professionals would be more than happy to reach out to you and have a further discussion. Thank you for your time today.